Hey everyone, welcome back to the channel. Today we are diving into a term you have probably heard a lot if you are into the stock market, the IPO or initial public offering. If you are new to investing, understanding IPOs is crucial because it's one of the key ways companies go public and get listed on the stock exchange. So let's break it down. An IPO or initial public offering is the process by which private company offers its shares to the public for the first time. Before this, the company is privately held, meaning its ownership is limited to founders, early investors, or venture capitalists. So, why do companies go public? Great question. Going public allows companies to raise a lot of money quickly. This capital can be used for expanding operations, paying off debts, or even funding new projects. It's also a way for early investors and founders to cash in on their investment by selling some of their shares. How does an IPO work? Let's look at the IPO process. It all starts when a company hires investment banks to underwrite the IPO. These banks help determine how much the company is worth and what price the share should be offered at. Once the shares are priced, the IPO is opened for institutional and retail investors to buy in. There are two main types of investors. Institutional investors like mutual fund or hedge funds who get first access to the shares. Retail investors like us who can apply for shares once the IPO is available to the public. Now, you might be wondering, should you invest in an IPO? Well, it depends. IPO can be exciting because you are getting in at start, but they can also be risky. Not all IPOs succeed. Some may get even drop in value after being listed. It's important to do your research on the company's financials, its business model, and market outlook before investing. Here's a quick breakdown of the pros and cons of investing in IPOs. Pros: we get opportunity to invest early in a potentially high growth company. Second, it can generate quick returns if the stock performs well post listing. Now let's see some cons. First one is high volatility. Prices can swing drastically. Second, lack of historical data. It's harder to predict how the stock will perform. Always assess the risk before jumping in. And that's a wrap up on IPOs. Hopefully, you now have a clear understanding of what an initial public offering is, how it works, and whether it is the right investment for you. If you found this video helpful, make sure to like and subscribe for more stock market insight. And if you have any questions or topics you want me to cover next, drop them in the comment below. See you in the next video.